All right, we're live. Let's take a look. We got Scott and Daniel here. Let's just double check and make sure that we're all good to go. Yeah, we're on the page now, dude.
All right, Bruce. How do I check that, by the way? It's live dash webinar or some shit?
Yep, we are on the, everybody's live with us now. So let me just get into it. I think you're streaming. I think we're both on it. So yeah, we could start kind of welcoming everybody and getting going here in about 10 minutes now. So let me just get into it.
Okay. You there, bro? Hello? Hey. Yo, you there?
Yeah, I'm here, man. I was just looking at some settings, making sure we look all good, and yeah, I see you. It looks all good.
Let's get after it. Okay, so it's 5:48 a.m. here in Bangkok. We're going to kick this off just after 6, or I'm saying 6 exactly, but there'll surely be a late person or two. This is going to be awesome. I'm really looking forward to it. All right, I'm going to power drink some more coffee and hit peak alertness before we start. I'll be back. Okay, this let me just I'm just going to run through the PDF one more time, make sure there's no obvious mistakes.
Yeah, I think we're all good. I took a look at it yesterday. If anything, we'll just skip a slide and go from there. But this is exciting. This is a good system. It's a system I've never traded personally, so I'm just as excited, I think, as everybody else to see this webinar, because I know you've had success trading the system, and you've always pushed me to trade it. And yeah,
what I've really noticed since I've been doing it again the last couple of weeks is I stopped trading this system after about a bit over a year, after about a year and a half of trading it. It was very successful, but I wanted something 100% mechanical with no discretion, and to simplify my life. And you and I built Thor and traded that, and I abandoned this. But trading it again, I just realized how much higher performance discretionary systems can be when they're good. Like, I mean, this is an amazing system in terms of performance. Like, there's absolutely no way, shape, or form that any mechanical system, even ours, is going to even come close to this. Like,
yeah, and there's a lot of discretion in this, right? I mean, with kind of your entries, especially, and which markets you trade and how much you're at the screen. It's a very kind of how much time you want to commit, right?
Well, the mechanics of it are more difficult than it sounds from the rules. From the rules, it sounds quite simple, but the mechanics of how many times do I scan the markets? What happens if I'm going out for lunch? What happens if, because you take a trade on a 5-minute chart and you're trying to let it run for like 24 hours. So the practical side of it is that stuff about, what happens if it's getting close to my level and I'm outside? How do I manage that? How do I manage 3 simultaneous trades and I've got to pick the kids up from school or whatever? Yeah.
How is the trade management of it? Is it do you have to be at the screen once you're in an entry? And we're jumping around a little bit before, of course, but I'm just curious.
So the way it works is you bank partial profits at 1.2R, and at 1.2R you move your stop to break even less a few ticks, so less about 3 ticks, in case it retests the old breakout level, and then on you're taking a mix of mechanical and discretionary exits. The discretionary exits are the forerunners to the euphoria exits. So it's like you get an expansion bar and you bank a quarter of what you've got left. You get you get anything that you don't like in the price action and you bank a quarter of what you got left. You got there's a whole bunch to it, but the mechanical exits on it work just fine.
Right, but so you kind of want to be like on your phone or like in touch with it?
No, not really. In the last stage of the trade, so I mean, this trade is going for 4R plus winners. This system is going for 4R plus winners. So there's not a lot to do until you hit 4R. So most trades, only like one in 4 trades is going to hit 4R, right? So you can't be sitting at the screen waiting for that. That's fucking waste of your life.
And now you could be in a trade for a long time. Remember you telling me even though you're in a 5-minute, you can be in a trade for as much as a few days?
I've been in a 5-minute trade for 3 days, too.
Yeah.
Which is an amazing trick. Like,
yeah, you just stick with it and you're with the trend. So
8 pip stop, you're catching right at the top. And, what is a perfect trade? What's your definition of a perfect trade? My definition is one that doesn't fuck with me at all. Like I get in, bam, it's in profit. Okay, I'm still in profit. Oh, it's making more money. Oh, it's making more money. Never fucking with me. It's never like, oh no, I wish I wasn't in that trade, or oh no, I wonder if that's going to work out. So emotionally, this system is really, really nice to trade because you're getting in and you're walking away while you're in that early stage. So what we're trying to do is enter in a low volatility period before the trend happens. So by entering before the trend happens, we're getting the best bang for our buck in terms of risk reward because we can get away with a really tight stop. If you get in on a fast running trend, you're going to need a 50, 60 pip stop, right?
Yeah. Hey, before we get into it, I wanted to ask, is there anything you did special last time to record this? I think YouTube recorded this automatically, right?
YouTube recorded automatically, yeah.
All right, I'll just double check before we start, but I think we're technically all good to go and everything this time around. So yeah.
All right.
So a couple more minutes and we'll get going. All right, what about, so this is really suited for what? For FX and for equities, right? We talked about not cryptos.
So it works for FX, it works for equities, it works very well on futures markets, particularly the E-mini market and the DAX market and ZB and ZN and it requires deep liquidity and a real market. So the cryptos, anytime someone big decides to take a position, it's going to blast it, right?
Yeah.
Like, I mean, even myself, I've noticed moving the market around in these small shit coins. So it's not really suitable for that because you're using these incredibly tight stops. And it's you need a market that's difficult, verging on impossible to manipulate. So if I'm looking at...
You need a real market, huh?
You need a real market. So gold, silver, copper, ZB, ES, futures, SPY, ETFs, the diamonds, DIA, the QQQs, that kind of stuff. That's where you're at.
Gotcha. But I think you did it exclusively on FX, right?
No, FX and E-mini.
Oh, you did? I thought you were exclusively FX.
And in E-mini, you can actually if you're using it intraday, I'll cover it in the system building masterclass, but you can drop down and take the trades on a 1 minute trade. So you can drop it. So instead of going daily 240, 60, 15, 5, you can go 240, 60, 15, 5 and take your entries on the 1. And I had a number of really successful trades on the 1 minute that on the if the market's deep and liquid enough, you can catch like a 2 hour move looks like a whole day move somewhere else. So it's just a really nice setup. And but more importantly for people watching is not the setup or the exact rules. That's kind of bullshit. The point is to notice. Before I saw this system, I didn't know what a really high performing system looked like. I didn't know how do you go from building a system that's a 0.2 expectancy or a 0.1 expectancy like we used to into something that's a 0.5 expectancy. Like, how do you fucking do that? And you do that by getting really specific. Like
exactly what you're looking for.
Exactly so. So, I mean, I'll wait until we start the webinar. But this specificity is really at the heart of what we're doing here. How do I see the chat stuff, Dan?
It's you have to go out of. It's you like I have the YouTube channel going in like another browser and I muted it. Why don't you just focus on the webinar? I'll moderate the chat. I'll let you know if there's any good questions in there that I can't answer. Yeah, because you got a lot to cover. I feel like there's a lot of information in this webinar.
Yeah, there's a lot of information in this webinar. It's
so.
Webinar, how do I do this? Present.
All right, so we're almost ready to go. We got a minute. I think we got about 60 people on. I sent another reminder to everybody in a couple seconds. So, yeah, you want to share your screen and slowly start to get into it?
Okay, are we starting right on the time, or what are we doing here?
Yeah, let's start kicking things off. Let's.
I'll wait until the exact time because we told people the time and
You're a man of your word. Not a minute early.
I'm a lying shit weasel, and you can goddamn prove it.
We got a good question in here to start about how to backtest this. Someone's saying it's hard to backtest in a 5 minute. My reaction is you don't backtest this.
Okay, so we're going to get into this, but the key difference between discretionary systems and mechanical systems is discretionary systems you can't fucking backtest. Because if you backtest and you go, oh, I would have taken that entry, oh, I would have taken that one, your brain only sees the good ones and you get this sort of false idea. And this is at the heart of why a lot of people do backtesting and get really great results. And then they go to trade live and they go, why don't my backtest and my, there's a number of ways that you can mess that up. But with discretionary system, and I remember the first times I met Van Tharp, he was like, oh, how much backtesting do you need to do? He's like, 50 trades. I'm like, the fuck, dude, that's just retarded. 50 trades doesn't prove anything. 1,000 trades barely proves anything. And then when I realized that Van didn't actually know how to backtest properly, and all he saw was in the early days in the 90s and the 80s when he started doing this, people struggling with computer backtesting because data wasn't so good then. It was like punch cards and shit like that. It was that kind of era. So backtesting was a big pain in the ass. It's not such a pain in the ass now. It still sucks. But he didn't like backtesting at all. So what he was about, Van Tharp pushes everyone into these discretionary systems.
Right.
And discretionary systems have
system-based discretion. That's how they describe it. Systematic, because there's a clear structure there. It's not just, shoot from the hip, bomb, 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 take whatever you want. You have a clear plan, but there's a lot of, you're not a robot.
Okay, so from my point of view, Van's a psychologist, and so what a fucking surprise! He's going to push people into the way where psychology becomes important, because psychology becomes important again in psychology becomes important again if you're trading discretionary systems. Psychology is a minor role if you're playing mechanical systems, but on discretionary systems it has to be game tight all the time. Otherwise, you're just going to go on tilt and revenge trade one day and blow up a month's worth of profits.
Yeah, you want to be doing meditation, yoga. For you, it's going to the fight gym and kicking some ass, right? You need something to, get your head straight. So, hey, listen, 7:02 in New York. What time is it for you? 6:02 in the morning?
It is 6:02 a.m. here in fantastic Bangkok, and we're going to kick off discretionary system trading webinar. And I'm Scott Phillips, and this is Daniel Sporran. And for those of you who don't know Daniel, but you know me, Daniel is an incredibly good trader. In the mechanics of trading, he's actually better than me. He's a young guy, and I met him when he was on this stupid blog that we used to both frequent, and and he's become an amazing trader, and I've learned a lot from him. So, all right. So today's webinar is discretionary system trading, and what the purpose of today's webinar is to take you from I know the basics. You've all got the heart of the rules already in the emails that I've sent, and if you haven't got those emails still, I'll be sending you a copy of all of those and all the screenshots that we're going through today. So don't stress too much. You don't need to take too many notes. What I want you to concentrate today on is understanding the principles behind the system and understanding at a deep level. So what you'll learn today is I've got this little yin yang symbol here, and on the left hand side is the white side, which is where we're just following the rules and being like mechanical trading robots. And on the right hand side is this dark side where you just shoot from the hip. You take whatever trades you fucking want. You see a chart, you like it, you go balls deep, yeah. And we all know that the dark side leads to madness, and the white side is good, but it's never going to be as good.
It's limiting, right?
It can never be. So there's a middle path between pure mechanical systems that tell you exactly what to do and discretionary approaches, which eventually you're going to blow up your account. And what I want to point out to you is in the yin yang symbol, in every white, there's a little dot of black. So in every pure mechanical trader should have the freedom, just a little dot of freedom, to just ignore the rules every once in a while. And similarly, every dark side guy should have some rules there to stop himself being an idiot.
All right. You ready to share your screen and show the PowerPoint, or?
Oh, am I not sharing my screen?
Oh, yeah, you're not. Yeah, so where you click on the left side and click the little green button, screen share, through the Hangouts, and share your screen.
Hold on. How do I do this? I don't even.
So just go to the Hangouts, hover over on the left side, and hit the little green button.
Okay. Screen share.
There you go. I'll let you know when we come across.
Thank you. That was embarrassing.
No worries. Are you sharing now?
Am I sharing now?
Give it a couple seconds to come through. Yeah, it's coming across.
Okay.
All right.
Okay, now let me just work out how I start this. Sorry, guys. How do I?
Yeah, do a view.
Present. All right.
And I'm going to mute myself, so I think it switches the video to me when I'm talking. So I'll mute myself, let you talk, and yeah, we'll jump in as we need. So I'm on if you need me, bro. Good luck.
All right, guys. So today's webinar is discretionary system trading, and we're going to go from I know the basics to I'm an expert, and with Daniel and myself. So what you're going to learn today is that there's a middle path between pure mechanical systems on the white side, which tell you exactly what to do, and discretionary approaches, which tend to give you the freedom that we all desire, but they also give you the freedom to blow up your account. Now, what we're trying to do is walk this little red line of middle path here, where we've got a lot of freedom to take the best trades, but we've also got a lot of structure, so we can't mess ourselves up too badly. So what we're doing is sort of painting like little guidelines, so we stay in our lane, you know. And what I'd like to point you out is that for every mechanical trader just following the rules like a trading robot, it's helpful to have a little dot of dark side freedom in. And vice versa, for every dark side trader who's just shooting from the hip and discretionary trading, it's very important to have at least some white side structure involved in what you're doing. Okay, so the advantages of discretionary system trading compared to mechanical system trading is a fixed set of rules has many advantages, but a fixed mechanical rule set can never ever be as good as a true expert who's paying close attention. Now, the discretionary systems that I've seen have far greater earning potential. If you've got a small account and you need to earn 100 to 200% per annum, and you need to do that consistently, these are your systems. You don't, if you've got a $20,000 account, it's not realistic to trade a full mechanical system and expect to eat what you kill and live off the proceeds. Now, you don't really get many free lunches in the financial world, and discretionary systems require more skill, a lot more skill. And so what today's webinar is about is addressing you, is equipping you with that skill and providing you with the knowledge that you can go away and practice this until you have the skill. So if you imagine today is like me teaching you a martial arts move, and then you've got to go drill it until you've done it 1,000 times until you're really good. So it's going to take you a little while. Okay, so why discretionary systems? I've got this quote from Van Tharp, who's an old mentor of mine, who taught me how to build systems like this. So as soon as you state your rules so precisely that a computer can execute the trades, you open yourself up to errors of omission. So these are good or outstanding trades that your automated system can't take because your rules are so narrow. Now, those missed opportunities, they're not mistakes, but they limit the potential results of the underlying logic behind the system. So the mechanical system results will look rather weak next to the results of a trader who used that same system and was allowed some discretion to take all of those other trades that didn't quite fit the precise mechanical system rules. So when I met Van, I was trading a mechanical system, the Crazy Ivan system, and I had it fully automated, and it was trading at like 0.11 expectancy, and I thought that was terrible. And then I showed the results to Van and his crew, and they're like, oh no, for a mechanical system, that's not bad. And that's the truth. So discretionary systems just produce better results. They're also more complicated. Psychology is more important. Yeah, it's pros and cons. So what will we achieve today? You're going to understand at a very deep and not a superficial level what a very high-performing system looks like. And you're going to understand the process of turning this knowledge into a profitable trading business, because me just showing the rules isn't going to get you to expertise. So you're going to understand how to monitor your own performance and how to know when you're ready to trade for real money. And from my point of view, and until I saw a 0.5 expectancy system, I didn't even understand how that was possible, and I didn't understand how to start building a system like this. So if you're trying to build a different sort of system, this is going to be really invaluable, because if you're paying close attention, you can take the principles of how we build this system, and then you can throw it into other concepts as well. So today's goal is we're going to take you from I know the rules to I'm an expert. And we're exercising discretion and freedom of choice here, but if you don't know what's a good trade and what's a bad trade, you're just randomly flailing. You're just flailing. So you must understand the psychology and not just the rules, because there are times in a discretionary system where you're going to want to bend the rules, and eventually you're going to want to be able to break them. So why is discretionary trading so hard? So we evolved to see patterns. Pattern matching is part of our DNA. You're a caveman 100,000 years ago. You're sitting under a tree and you're starving. You're really, really hungry. There's two cavemen there. Caveman 1 says, oh, man, I'm just so tired. I'm just going to lay down and have a rest. Caveman 2 says, no, fuck that, man. We got to get some food. And he starts looking around and sees a stick, and he can sharpen that stick, and then he can make a trap, and he can go kill something and eat something, or maybe he checks out the next hill over, or the guy who saw patterns and saw possibilities is the guy who survived. So that survival trait has been passed down again and again and again, and we are effectively pattern matching monkeys. So humans are apes wearing shoes that don't think we're apes. So have you ever had the experience where you fund a stock account and you sit down at your screen immediately after the stockbroker has told you, oh, there's money in the account, and immediately you just see a heap of trades that you have to take? Like, I need to own that.
Let me say yes. First time, I remember the first time I loaded up account on my broker, I couldn't wait to buy stocks. I think I got rejected because it was like a pre-approved and not approved.
Couldn't wait.
Absolutely.
So what that is that is your brain just jumping in and going, I'm matching patterns. I'm matching patterns. That's what I do. So and what happens with discretionary trading is you sit down every day to look for a pattern, and your brain just helps you and goes, oh, we're looking for patterns. I'll help you find some patterns. And so we see things that aren't there. So fundamentally, at the heart of the human experience is that you just can't trust anything that your brain tells you. Your brain is just fucking lying to you all the time. So what we need to be an effective discretionary trader is to put a lot of structure around this, because we are always about, at any given point, we're just about to fuck ourselves, right? Okay, so the solution is to put structure around what we're allowed to do. So we give ourselves some limited freedom of choice, but we still box ourselves in with rules that stop us from being idiots. So the key point out of all of this is that if you think about, we're crafting an exit methodology that's gonna take this to a very high Sharpe ratio, very high system quality number. What we need to do to have a very high system quality number is to take very similar trades all the time. If we're trying to just pick the best entries, all of those entries are going to be different. We're going to get some mean reversion entries, some trend following entries, some this, some that, some choppy entries, some channel entries, and we're going to mix them all in, and we're going to get a very average result. So what we're trying to do here is to take trades that functionally look almost exactly the same. So you're going to see that all of my trades, when we go through examples later, they'll almost look exactly the same. And you'll be hard pressed telling the difference between them. And so the result is that when we take things that, we take the inputs that look almost exactly the same, the outputs also look a lot more similar than you have any right to expect. So that's the key, is because we're taking identical, similar inputs, we're getting very similar outputs. And when we get similar outputs, we can craft an almost perfect exit methodology. And that almost perfect exit methodology is the secret sauce behind this. So what is the failed breakout system? It's an extremely high performing system. It's got a system quality number 100 of 3.8. It's got an SQN by Van Tharp's methodology of 4.6, which rates it as beyond excellent. It's got a 65% win rate. It's got expectancy 0.5, and that is not a typo. It takes both mechanical and discretionary entries. It's got extremely low drawdowns. 9 out of 10 weeks it ends positive equity, and you typically have from 2 to 5 opportunities per day.
Really? It does 0.5 expectancy? It's that good?
Yeah, it is that good, man. No shit.
But how is it hard? I mean, it's obviously hard though. It's peak performance.
Not really. Training. Not really. It's all the rules. Like.
Okay.
Yeah.
Keep it going.
Sure. All right, so why does the failed breakout system perform so well? So what we're doing here is we're using multiple time frame confirmation.
Oh, hey, Scott, sorry to interrupt. Got a good question here. Someone asked, what does SQN mean? Can you just spend a couple seconds on that?
So SQN is system quality number, and effective SQN 100 is the ratio of expectancy divided by standard deviation multiplied by 10, because 10 is the square root of 100. So the actual formula is expectancy divided by standard deviation multiplied by the square root of the number of trades. So what system quality number is, it's a version of Sharpe ratio, which institutional traders use. But for home traders, Sharpe ratio kind of sucks. It doesn't really tell the full story. So it's just a better Sharpe ratio for home traders. And when you're developing systems, it's nice to have like one number to rule them all. And system quality number is an at a glance. If it's better than 2, it's tradable. So when I'm testing systems better than 2, it's tradable. This one's a lot better than 2, right? You good with that, Dan?
Yeah, thanks, bro.
All right. So we're using multiple time frame confirmation to turn average entries into high probability entries. And you're going to see that with the Crazy Ivan entries, which are objectively pretty average edges, but they're just magic in this system. So we're entering at the lowest volatility point. So when volatility is much more predictable than price. So volatility cycles very regularly from low volatility to high volatility, back to low volatility. So we're entering at the lowest volatility, so for a start, we know that the odds are favoring volatility expansion in the next phase. And secondly, we can place a really, really tight stop to get just massive bang for buck risk reward. Okay, so we have many opportunities, you know, if you've been getting my daily emails, typically we have, you know, five or six minimum per day, so we can pick the very best ones. And this is key. We have to develop our discretion muscles to go, okay, we had 8 opportunities today. Which are the best 3? So the last point about this system that I really want to make is that it relies on human nature. So what we're looking for is something that's, if we're looking at a bullish entry, we're looking for something that's very bullish on the daily, very bullish on the weekly, very bullish on the 240, very bullish on the 60, but on the 15 and the 5 minute, it looks like arse. It looks like a very convincing bearish breakout on the small time frames. And so we're waiting for those short time frame traders, who would tend to be the worst traders, to get short and get trapped against the trend. And as their stops get triggered, you're trading against those. So the idea is that we're trading against the dumbest traders. So these were my own real money results for the first 5 months. This isn't some sort of back test or paper trading bullshit or anything like that. They weren't bad. You know, I made 37% in the first 5 months, but they got better. So those were while I was learning, and my performance improved over time as my skill improved. And you know, I'm a lot better than I was in 2013, we did this from 2012 to early 2014, and I'm confident my results would be better. Okay, so some marketing guy told me that I need to give you a bribe whenever I do a webinar. So if you stay to the end of the webinar, I'm going to give you a PDF document with all the entry setup rules for the system you see today. You're going to get a big collection of screenshots, much more than I'm showing today, of both winning and losing trades. And I think it's really important to see losing trades that suck, some that worked that were okay. You can get a real feel for it, and you're going to get the spreadsheet that I use for my own trading to use as a template. So we've got a lot to go through here. I'm Australian. I know we speak quickly. I don't want you to miss your details. So can you do me a favor and switch off your mobile phone, your Facebook, Skype, anything that's distracting? This is really complicated stuff. We have a lot to get through, and I'm just going to be pushing to get it all done on time. Okay, so who am I? I'm a trader. I'm not a trading educator, because I hate those guys, because they're all assholes. And most of you know me from the Price Action Masterclass or my emails, but even though we talk every day about, you know, interesting things that are happening in price because it's interesting to me, I never trade that way. I completely trade fully systematically every time, and I take about 500 trades in a year across 3 core systems. Plus, I do a little bit. 10%. Yeah, well, yeah, I'd say 5% for me, maybe a little bit more sometimes, but yeah. 5%. Yeah. Okay, so most traders specialize in one narrow area of system design, like they're either a mean reversion trader or a trend follower or whatever. So I'm very fortunate to have been exposed to many different system types, and both discretionary and mechanical and fully automated and trend following and mean reversion. And I've worked with some really interesting people, some great people actually. And I've done some stuff right and I've done some stuff wrong, but the stuff I discovered the hard way, you get to just cheat and discover the easy way. So there's a fundamental misconception in trading. So most of us start in trading by learning some technical analysis. We find a chart we like, we place a trade, and it seems easy before you do it, but this sort of freewheeling, shoot from the hip style of trading, it's really, really hard. So it's actually the hardest type of trading there is. So why do we do the hardest thing before the easier way? And the easier way is system trading. So system trading isn't just more profitable, it's far easier. And the second point I want to make, which was amazing to me when I figured it out, is that getting better and better at technical analysis won't make you consistently profitable, because you're still stuck with this same, I'm an ape wearing shoes who doesn't think I'm an ape, cognitive biases, you know, you get greedy, you get fearful, blah, blah, blah. It's just a mystery to many traders why they just keep studying different and more technical analysis, and their profitability doesn't go up. So most trading psychology problems really disappear when you trade with a system. And even when you're talking about discretionary systems where you have a lot of psychology involved, the psychology aspect is really minimized compared to that shoot from the hip trading. So this is me up in the top left. Before, I used to constantly worry about what the stock market was going to do. I'd check things. I'd get up in the middle of the night to take a piss and check the markets. I'd spend a lot of time, on Seeking Alpha and Bloomberg and to my eternal shame, Zero Hedge, and I'd secretly hope for market crashes. And when I started trading systematically, I don't really care. The stock market's going to be up, or it's going to be down, or it's not going to do anything. And my job isn't to worry about that. My job is to follow my trading rules and not worry about the things I can't control. And there's a real freedom in life of just letting go of this bullshit that you can't control. You can worry about, are we in a bull market or a bear market? Is the stock market transitioning from a bull to a bear? You can worry about that all you want. You can chew on it like a dog with a bone, but you're not going to influence it even 1%. And what I've found is that stressful feedback loops happen when you worry about things that you can't change. So most trading psychology problems aren't really trading psychology problems at all. They're just you worrying about bullshit that you can't affect. Most trading psychology problems can be fixed with better trading procedure, which is what I'm going to show you today. So this is all about procedure. This is all about process. Amateurs worry about outcomes. Professionals worry about process. Tiger Woods gets up every day and hits a bucket of balls before breakfast every day. He's Tiger Woods. He doesn't really need to.
Yeah, he peaked in like his late 20s. He's past his prime now. I feel like.
I don't know.
Yeah.
Golf. Let's just say golf's a shit game, and
but when Tiger Woods was the shit, he was good. Same thing with Kobe, guys like that. They practice their craft a lot.
Everyone who's good at anything practices their craft. Chess grandmasters are out practicing their craft every day, and so should you be. This is no different than any of those other high performance things. So why would we do intraday FX trading? Now, this system works not just for FX, it works for futures, anything deep and liquid. So you can use it. I've used it on E-mini, I've used it on gold, I've used it on silver, I've used it on copper, I've used it on bonds, I've used it on all the FX crosses. So this market is really suitable for small accounts. You can trade $1,000 account with this if you need to and do proper position sizing. It's a very deep and liquid market. It's the most deep and liquid market from my perspective. You could trade 30 million bucks worth of Euro USD right now at the market with no slippage. So your position sizing can be exact or near exact, which is a huge advantage over the futures market. Trades 24/6 days a week, so there's only one day that you can't trade, which is pretty cool. It's both a disadvantage and an advantage. You cannot trade incorrectly even once. You can't do that thing you can do in the stock market where you buy a stock, it goes down, and then it magically turns into a long-term investment, and you're just going to sit on it until it comes good. You can't do that. That's just not an option in the FX market, because the first time you do that, it's gonna blow up your account. And a lot of us have had that experience where we'll just hang on until we make our money back, and you just end up blowing up an account. So most people think that's a disadvantage. I think that's an advantage, because you just absolutely have to trade like a professional. You have to do things properly. You have to have stop losses. You have to honor those stops. So the failed breakout system is a simplified version. Well, it's actually parts of it are simplified, parts of it are not. If Gabriel Garamatidis' busted breakout system, and it's developed from Van Tharp's Super Trader program. And Van is a mentor of mine who specializes in discretionary system design, and he teaches this $60,000 Super Trader course, which is really expensive, but it actually turns out very good traders. He's never had a trader complete his course and then blow up, which I quite like. So he's charging a lot of money, but he's delivering a great result. And the main differences between Gabriel's system and mine, I removed a lot of complexity. There were things like pivot points in there, which I don't agree with, which I tested and found weren't an edge. I added some mechanical entries for the re-entries, and I improved the exit methodology markedly. His exit methodology needed a little tweak. So why am I giving it for free? So some people don't think they can come up with a creative idea for an entry setup, and there's an easy fix. You can either use one of mine, you can modify mine, or you can get some ideas from mine. And in my life, I've gotten huge benefits from sharing my trading methods and results. But I've always shared everything that I've done, and great traders have always wanted to collaborate with me. And the caliber of people that I collaborate with now, they're hedge fund guys, investment bank traders, HFT programmers, economists, and all these really amazing people who are way smarter than me, all want to come and work with me and share with me and show me their systems, and I show them mine. But this all came from sharing and not hoarding knowledge. So for me, sharing my knowledge has been a winning strategy. So I'm going to keep doing it. And I really hate this sort of trading educator industry. And it just rings my bell to give away better stuff than what they charge $60,000 fucking dollars for. I'll give it away for free because fuck you. That's just the way I feel. And a huge amount of that trading educator industry is completely fraudulent. The guys who can't trade have never traded. Guys who teach and can't do. And I personally wasted years on baseless theories and dead ends. And if I can, I'd like to save others the suffering I experience, and it doesn't cost me anything to share. And if I have an edge that's going to be arbitraged away, I'm not telling you. But if I have a strong edge that's not easily arbitraged away, it doesn't hurt me. So what market behavior are we trying to capture with this system? So one phrase I want you to remember is not the head nor the tail, just the fillet. So if we sorry. All right, I'll just get rid of that. Sorry about that. Okay, sorry, I didn't know how to switch off notifications because I'm an idiot. Okay, so the first part of the trend, if we look at this first part of the trend, if you look at here, this looks like a trading range. So you're not even sure that you're trending here. And at the last part of any trend, things get messy as people start to take profits, late coming idiots get in. So it gets really messy and choppy at the end. It's only this middle bit where things get smooth and we get high probability entries. So we're trying to avoid taking trades too early and too late. We're just trying to take the middle bit, basically. So by being very specific, we're going to isolate the market phase that we want. So we're looking for several different market behaviors to happen at once. We're looking for, firstly, a strong trend on multiple time frames. And you've all got my daily emails and the rules. We'll go through them again, but the daily trend is the most important. As well as a strong daily trend, we're looking for a pullback to support on both the 60-minute and the 240-minute. And then we're looking for a low volatility phase of the market on the 5-minute. And then we're looking for a false breakout in the opposite direction of the trend. So we're trading against the trap traders to kick off the move. So by combining all of these 1, 2, 3, 4, 5, 6 things together, those 6 things aren't going to happen every time, but when they do, we're good. So how are you going to set up your charts? You all know this. So we're going to have some moving averages, some 8, the 21, and the 50. Now you can change these. They have zero predictive ability. They're just visual aids. So they're nice visual aids. They work right. If you want to change them, have at it. We also need a watch list here. So we've got a list of currencies or commodities that we're trading. And as an option, you can have this ATR 14, which we use as a proxy for volatility on the 5-minute. So what do we have here? We have a rules-based method of saying that's a trend. So most of us, we look at a trend and we go, is it a trend? Maybe. Like if I'm looking at this, I go, yeah, maybe. But we have a rules-based method here. So for a bearish trend, when this blue line is below this purple line, is below this red line, when they're all in order, then we say that's a trend. And this is not something that we can have an argument about. We just say that's a trend. Now, I know moving averages are lagging, and this is all a bit weird here. Like it's trending before these moving averages cross. But if you remember, we don't want the head and we don't want the tail. We just want this middle bit. So the fact that moving averages are lagging, it doesn't actually hurt us with this system. It doesn't hurt us at all. So what we're looking for is, by this definition, we're looking for at least 3 out of 5 time frames to be trending. So this one is trending. This one is trending. This one is trending. You can see the blue above the purple, above the red. This one is trending. So this is a market that's trending on almost every time frame. And it looks, if we look at the 15-minute and the 5-minute, see how bullish the 15 and the 5 look, whereas every other time frame looks super bearish. That's exactly the sort of thing this is exactly the sort of market behavior that we're trying to isolate. So in a perfect world, these short-term time frames look really bullish, and whereas every other time frame looks bearish. That's the secret sauce here. So what we do is at every day we go through this watch list. We start at number 1, and we get out a bit of paper or a notepad window, and we just do a quick scan. So you just at a glance, you're not paying attention to price action, you're not doing a detailed analysis of the chart, you're just going trending yes or no, trending yes or no, trending yes or no. And there's some daily videos which I've done there on my YouTube channel of me doing this process. It takes 10 to 20 minutes, depending how in practice and how good you are and how complicated the day is. So you do 20 minutes, you get a short list of potential setups, and then you might have 5 potentials, and then we go back and we find the very best ones. So it's just a quick scan to make a short list. You don't get worried about details. You just make a short list and revisit it later. Now, as you get better and better at this, you can bend the rules a little at the start of the trend because the moving averages are lagging. But it should always be a situation where the moving averages are obviously coming into alignment and the price action is supportive. And this is where you can plug in some of your previous knowledge from the price action masterclass is going to really help you. The price action masterclass is going to be the secret which allows you to trade this at a very high level. So this is the process, and you do it once a day. And if you don't have any setups, you take the day off. And it's very important that when there's nothing to do, you don't try and make work for yourself. You don't push it. It's important to take time off when you're trading the system. You can't trade it. You can't trade it for months at a time without a break. It's emotionally fatiguing doing discretionary trading. So your attitude should be, if there's no potential setups today, great. I'm going to take a day off and do the most fun things I can think of. So number 1, we scan a short list of trending markets. Number 2 is we revisit the short list, and then we isolate the best opportunities. And 3, we decide if those setups are ideal. We're only looking for the very best, the tastiest, the juiciest cherries here. If they're not ideal, we just skip. And then we drop down to the 5-minute time frame and look for entries. Which brings us to the problem. What is an ideal setup? And you need to know what an ideal setup is and what an average setup is and what a crappy setup is, because otherwise you're just flailing. So that's the primary thing we're trying to accomplish today. So the daily chart is the most important. So you're looking for a chart with at least a 70% chance of continuation the next day. That means you look at the price action like we teach in the masterclass and use the moving average as a visual aid. So moving averages have zero predictive ability. Anyone who thinks they do, they're wrong. But what they are is they're like, training wheels on a bike. So what we're going to do is we're going to go through some price action bar by bar, and I'm going to show you what's good and what's bad and what's messy. So this blue line is our 8 moving average. So the ideal setup is below the 8 moving average, but you can see as we get too far away from the 8 moving average, we prompt some mean reversion. Like this is a day of attempted mean reversion. Here we got way outside the moving average and it prompted some mean reversion. So mean reversion is counter trend trading. We're trying to trade with the trend. We want to avoid any mean reversion extremes. So this is like a Goldilocks system. We're trying for not too cold, not too hot, just perfect, just right. This porridge is just right. So let's go through this. You can see that the blue is above the purple is above the red. So technically this fits our definition. It's ordinarily we would say that that's a little too tight, but early in a trend we can be a little more flexible. Like here, it's obvious this trend is done, even though this 50 moving average is lagging and we don't say trending here. Early in a trend, if it's very clear, and how do we know it's clear? By all the things we talk about in the price action masterclass. Long sequences of green bars, micro gaps. You can see this micro gap between here and here. No pullbacks for the first couple of bars so that the bus leaves entry. The first pullbacks being being shallow pullbacks. All the things that we already know and that we talk about every day. This is a decent day to trade short. So this one here, we've got two trend days. A trend day is a day that opens at the close, opens at the highs, close at the lows, expanded range. Bears have dominated the open and dominated the close. This one is a little overextended. It's a little too far from the moving averages. It's not too bad because we can see that the trend is very strong and it's at the start of the trend. If this was at the end of a trend, I'd be standing aside. But if there was any lower wick buying pressure, so if we saw any sort of buyers start to come in, I'd stand aside. But I would still take this if the other timeframes were perfect. So this is a situation where we're using our discretion, we're using our intuition, we're using our knowledge to say, okay, this one's a little too overextended. It's probably close to the end of this phase of the move before we at least try and paint a pullback. Still not bad, not terrible, not great, somewhere in the middle. It's okay. Okay, now you can see that mean revert. The next bar, we're going through this bar by bar. So one day. So you can see mean reversion has started. The market's tried to go on down and fail. That's a good point to stand aside. We've got evidence that maybe we paint a bounce up to here and then come down. Maybe we start painting a more substantial bounce. Maybe it's a false break below this trading range low, come back. You just don't know. So we're trying to avoid these. The theory of what you're trying to do here is you're trying to not be a coin flipper. You need 70% or greater odds on the daily. And so how do we do that? We stand aside from anything that looks like a coin flip. Anytime you go, I don't know what's going to happen, you just stand aside. So the next bar, the market did not do any mean reversion. That was all the mean reversion it had. So it's still good. So this is still a good bearish trade. Okay. As soon as you see a big counter trend bar like this, not only do you want to stand aside, you want to stand aside for a fair while. So you want to be very suspicious, even though it's fitting the definition of blue below the purple below the red. You want to be very suspicious of any marginal days until you're absolutely certain that the trend is back on. So the way I think about it is, imagine like a perfectly still lake. You throw a big rock into it. You can't just, the rock's disappeared. It's on the bottom, but there's still ripples and eddies flowing out everywhere and still cross currents. So this is going to spook a lot of these trend traders. This is going to embolden bulls from the sideline. We're going to get a lot of cross currents, and this is going to take some time to sort itself out. So when you see that, you want to stand aside until you're really, really very sure it's back on. So, and this is the price action after that. This bar here was that day, and you look at how annoying this is. All of this technically fit the definition, but none of this you want to trade. So this is the perfect example of how we use our skill to stand aside of crappy trades. Okay, so we've got a test here. If you guys can tell me which bar you think is the perfect bar out of this screen. Daniel, I'm not seeing the chat, so if you guys just have a think about this for a minute and then let me know. Maybe Daniel can take over again.
Yeah, let's.
Which is the perfect bar and which is the second perfect bar? Or actually, let's just keep it. Which is the perfect bar?
I like the outside period at the top there to start looking at shorts.
Which one is that? This one here, or this one?
I don't know if I see your cursor. The outside period, right off all the EMAs.
Just before, on about 2/3 of the way into the right hand side, the one that. Yeah. It's not bad. It's not the perfect bar though.
Or any of those first three bars. Maybe the second bar, the confirmation bar, might be even better.
Boom shakalaka. Okay. What do other people in the chat think?
We got Matt Cooper said 7 from the right. Steven said the first bar, the first bear bar after the failure to penetrate the trend. And then Bruce said the 20th day bar.
Okay. Are they all the same bar? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay. Oh, Matt was correct. I don't know who else was correct, but I'm not surprised that this one is the correct bar. This is the best bar on the whole screen. Why? Because here it's still a little uncertain. This could be just paint a hammer, and then
The
keep
seventh
going.
on the right, right?
This one, you aren't seeing my cursor?
I don't think so. I'm not.
Okay. Yeah, this. Can you just ask, are people seeing my cursor or not?
I think other people do see it.
Okay. If other people are seeing it, it's counting from the right. 1, 2, 3, 4, 5, 6, 7 from the right.
Yeah, I'm not the only one, but that's okay. 7th from the right. Okay.
So it's the second bar in this last sequence of things. Now, why is this perfect? Because it's not the head, it's not the tail, it's the fillet. And what we have here is we have a market that's below the 8 moving average close, but not so far like the next one where we're going to have mean reversion. Now, the second best, this one here. So what we're looking for is a strong and smooth trend. We're not looking for a choppy trend. We're looking for it earlier rather than later in the trend, if we can. So this is the second best bar. We're looking for a close below the 8 moving average, but not too far. And we're looking for one side being totally dominant. So see how we've got a small lower wick. This is okay, but a big lower wick is not okay. So we're looking for something that's at least this or further down. Now, what I want to point out to you, go from the best bar, go one bar to the right. See how the close is right at the lows there, but the close right at the lows brought us like a false breakdown and then some mean reversion the next day. So we can bend the rules a little for the strongest trends, and this is where your discretion, your skill comes in. If the trend is really strong and smooth, you can be a little bit flexible. If the trend is a bit choppy, you want to stick right to the script. Okay, so to recap, we want a daily chart with an overwhelming probability of continuation. So overwhelming means what it sounds like. It means like you're almost certain. So the 240-minute chart is the next one we're going to look at. We want to use the 8 EMA as a visual aid, and ideally we want it either just touching or nearly touching this. And you can see these perfect points here, 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 here. You know, these are all great points to entry, right? And this was just random price action that I pulled up. This wasn't like cherry picking stuff. So pro tip, we're going to look for the crazy Ivan patterns after an 8 EMA touch is the basis for another system that I have, which we'll probably demonstrate later. It's all in the system building masterclass. These mechanical entries here are really cool. So the crazy Ivan entries from the setups toolkit and the system building masterclass are extremely high probability entries in this situation. So you're talking about a 70% win rate. So here we have a little inside day. I'd place the stop above here. Here we have a retest variation, sell here, stop here. Here we have a shooting star, the Thor setup. We have sell with a stop here. And you can see all those work. Now, how do you trade those? The best way to use them if you're going to be in front of the screen is to use the protect R exit methodology. If you're going to be in front of the screen.
You can do anything to bring on the cursor, by the way. I think you had it on for a second earlier. Yeah, there's no cursor on your screen.
Okay, how do I do that?
Bring it off monitor? I don't know. Where do you have it?
How do I do that?
Yeah, I think you got it now. Now that you took it off full screen, now we can see the cursor.
Okay, now I have to view.
Yeah, so maybe keep it like that. Maybe keep it like that and get rid of the left sidebar and then and that way you have a cursor. There you go.
Okay. So I have a cursor now?
Let me see. I'll let you know if you don't. Keep it going.
Okay, so So these crazy Ivan entries from the setups toolkit, these are extremely high probabilities in a trend. Now, how do we trade these mechanical entries?
It disappeared. The second you started talking and moving it, it disappeared.
I don't know, dude.
Yeah, whatever. So just point an arrow. You got the arrow thing? Just point an arrow. Just talk about each one, and we can just do without a cursor because all your charts are labeled. So, yeah, it's cool.
So if you're going to, should I go back to full screen?
Yeah, let's talk about those setups a little bit. Kind of talk about the retest variation, the entries for people, how they can get into those with.
Okay, so if you're going to be okay, so the way that I use these entries is I use them for re-entries. So most of us have had the experience where you get accidentally stopped out on a trade, you get unluckily stopped out in a trade, and you want to re-enter and do it again, and that way lies madness. So like Ken Long says, re-entries are the key to sanity, and they are. So but the problem with taking this highly discretionary approach as a re-entry is that you can go on tilt very easily and get into revenge trading and stupidity. So I have a strong preference for, if my first trade is stopped out, then I'll go take a second bite of the cherry with these mechanical entries, which are much higher probability, and we're going typically for a small win. We're not trying to go for a 4R, we're going for a 1.5 or a 2R. So how do you trade it? Use the Protect R methodology for exiting from the System Building Masterclass. It's a very, very good way to exit these setups. Otherwise, if you're going to be asleep, or an acceptable substitute is just set a 1, a 1.2, or a 1.5R limit exit, and you use limit exits when you're going to be asleep for a rollover. And it's critical that you don't do that beginner trader thing of staying up all night to watch a trade. You don't interrupt your sleep for a trade ever, because tomorrow you're going to need to be on point and going tight again, and you're just not going to have what it takes if you're sleep deprived. So the next category of mechanical entries are the retest variation sell after a deep retrace. So you can see these two boxes here, this retest after a deep retrace. These, I take these on any time frame. So this one's on a 15-minute. Anytime you see this where you get a retrace that pierces deep, preferably touching the red line, but at least the purple line, and then a retest variation sell, those are money. Those are extremely high probability entries, and they kick off all day. So anytime you know, if you want to just quick scalp and quick bang wins all day, these are this is the perfect basis for an intraday mechanical system. Everyone got that? You understand what a retest variation sell is? Significant high, highest high in 10 bars, one or more lower closes, which we have here, one or more higher closes placed in order to sell at the low of here with a stop at the high, and vice versa. Everyone got that?
Yeah, it's like a double bottom, double top base setup, right? I think that's a good way to describe it.
No, like a retest of the highs, really.
Yeah, you get a swing high or low and a retest of it, and then a move.
Yeah, exactly. So we don't really have time for a deep discussion of mechanical entries today. So they're covered to death in the System Building Masterclass, which we're going to put on sale again for a limited time at the end of this webinar. I know we closed it for a month, but we're reopening at the end of this. So especially the mechanical retest entry, it's suitable for pure mechanical intraday trading. If you didn't feel like this discretionary approach was a good approach for you, you could build your whole business around that one mechanical setup. And what I will do is, if I'm not feeling comfortable with the setup, I'll take the mechanical setup instead. If it's easier on the emotions, it's got less moving parts, less to think about, less to go wrong. And also, if I'm operating at the edge of my span of control, which is something we talk a lot about in the System Building Masterclass, how many markets can you follow simultaneously before you start to trade badly, or you start to lose performance? Then I'll take the mechanical entries, because the mechanical entries are set and forget. They don't impinge on my span of control at all. So whereas having a failed breakout entry might take 30 or 40% of my brain processing power, mechanical entry takes about 5%, right? Everyone got that? Okay, so let's move on to the 60-minute chart. So we're looking for a very specific thing. We're looking for the 240-minute to be just below or just touching the 8 moving average. We're looking for the 60-minute to be between the blue line and the purple line, so between the 8 and the 21. So you can see the point. I've got these two charts here. This is the 5-minute where I took the entry, and you can see we had a winning trade last week with that. Didn't hit the stop, which is the top green line. So if we look at that exact same point on the 60-minute chart, it's sort of ideal. Now, this is what Al Brooks called barbed wire tape. And the longer barbed wire tape goes on, Al's method is that once you see this barbed wire tape, you stand aside until it resolves. So we're doing something differently here. We're saying that at the start, it's ideal. In the middle, it's not perfect, but it's still okay. But the longer this barbed wire tape goes on, the more likely that it's going to resolve in the direction of the dominant trend. So here it becomes very good again. And what I want to point out to everyone is that we're not using the moving averages for prediction. These are just visual aids. These are just lane markings drawn on a road, right? Okay, so the 240 minute is just below the blue line. The 60 minutes between the blue and the red line. And yeah, let's look at the 15-minute chart. So the 15-minute chart is the least critical. So the 15-minute chart, we want ideally some of it between the red and the purple line. See how we've got, this is a perfectly proportioned 15-minute chart for this setup. So when we see all of those and that there, this is an ideal picture perfect chart for that. So we want it between the 21 and the 50. And the more sideways and the tighter the pattern is, the better. Because remember, this is the high on the left, we've got the high volatility phase of the move. Now we've got the decreasing volatility phase of the move until that volatility becomes unsustainable. Look at the smallest candle we have here. Now we see volatility starting to break out. That tells us that a breakout is imminent. Okay, now this is really important. So what we're trying to do is get 15-minute and 5-minute traders. Like 15-minute traders will look at this and think, oh, top's forming, I want to go short. Now, where are those stops going to place? Where are those dumb traders going to place their stops? People always place their stops above any spike high. So we're going to have stops here, stops here, stops here, stops here, stops here. And we can say with a high degree of reliability, if we get a spike up, it's going to trigger those stops in a cascade. So the first stop is going to get hit. It's going to trigger the second stop. It's going to trigger the third stop. It's going to trigger the fourth stop. It's going to trigger the fifth stop. You remember that game, like dominoes, or like that game of mousetrap? It's just going to go bam, 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 and it's going to spike very fast. So what we're doing with the system is we're getting everything lined up to make sure that these 5-minute and 15-minute traders who suck, they're just going to get taken to the cleaners when their stops are run, and we're going to be positioned ahead of that. So we're not going to wait till it happens, because we'll be entering into high volatility phase. We'll be paying a lot more. We'll be taking a lot more risk. We're entering at the low volatility phase. So when the daily, when the 4-hour, when the 1 hour are correct, we drop down to the 5-minute time frame. But we need to understand what's an ideal 5-minute chart look like. Now, the general principles are we try and enter in the low volatility phase of the market so that we get better risk reward. Now, you can use an ATR indicator as a visual aid if you need it or if you don't. Sometimes I do, sometimes I don't. What you're looking for is small candles. If you don't need an indicator to just show you small candles, then don't use it. So we're looking to draw a horizontal support line. So ideally on open and closes in the most logical spot. We're looking for a very tight sideways pattern, ideally. At the tighter the better, but we might bend the rules a little for a strong trend or a second entry in an established trend. So the false break of the trend line, so we're looking for a false counter trend break that's going to trap the 5-minute traders. And when they're overwhelmed by the higher time frame traders, they're going to be forced to cover. So let's look at some examples of trades that I've took. I've purposely included some losing trades and some trades that aren't ideal, all of which I took so we can build up our powers of discretion. Okay, so this first one, the first thing that we want to look at is the daily chart. Now, it's a clear trend on the daily, but it's a little bit speculative. It could be transitioning into a trading range with that previous spike high. The weekly is an extremely strong trend. The 240 minute is quite some ways outside the blue 8 moving average. So this is not particularly ideal. But the 60-minute is pretty good. The 60-minute is between the 8 and the 21 moving average. The 15-minute is also perfect. Now, the 5-minute, we have very clear horizontal support. Now, there's a preference for placing that horizontal support line at closes and opens on the 5-minute chart. And you can see we have the low volatility part of the range. If you look at the 5-minute chart, that ATR indicator is down. Can you see my cursor or not? Oh, I have a cursor now. Okay, that's cool. Okay, so you can see that we're entering on the low volatility part of the range. Volatility is starting to spike.
Yeah, you got a cursor now.
All right, we're cooking with gas here. Look at that.
Look at that. Hour into the webinar, we got a cursor. Let's go.
All right, I'm a pro, right? I'm a pro vet. All right, so here, this is the one which is not quite ideal. This is a bit speculative, but it's early in the move. I could see this taking off, or I could see it going up and going down, but we don't know. So this trade is not bad. So what we're looking for is a very clean support. Like, see how clean this support is? And then we clearly break it. And then after we break it, ideally you want that to recapture it straight away. So this just could not be clearer. These shorts are getting in and these shorts are getting fucked straight away. All right. So we're taking partial profits at 1.2R. So this is my partial profits point. And this one ended up hitting 4R, and I exited at 3R on a chandelier stop. So this is a pretty decent trade for me. All right. The next trade. First of all, we look at the daily. The daily is highly speculative. This is not ideal. We have no clear trend. This is 2 up, 1 down, up, down in the same day. This is not ideal. This is not a great trade. I liked it because of this particular candle in the weekly chart. I thought there was the odds that this could paint a very strong trend day. But this is, even though this worked, this is one I'd stand aside from. You can see that the 240-minute is close to where we should be, but the candle shapes of these are all shooting star candles. This one is probably going to need a wider stop. This one is going to mess us around a bit. You can see the 60-minute chart. This is not clean price action at all, but it's in the right spot here. The 15-minute chart, we had a false break of the support line, so we're in. This one is a B or a C trade, right? This is one that I would stand aside from. Okay, AUD CAD. We have a strong trend. It's away from the moving average, not too far. It's not bad, not perfect. I'd prefer to see the trend stronger and smoother, but it's still not terrible. You can see on the weekly chart we do have a strong trend on the weekly, and we've closed above previous resistance. So that tells us, with our price action reading here, if it was going to reverse, it was going to reverse here. It's not reversing, so it's probably going to continue. On the 240-minute, we're close to here, so almost. On the 60-minute, we've got, this is ideal between there and there. Now, on the 15-minute, you can see that stops are going to be clustered here, 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 and here. So if we get a stop run, it's going to trigger like dominoes. Now, what have we got here? We haven't got a great support line, but we've got a couple of points of touch. You can't quite see it. It broke down, came up above. So you would enter on a limit here. Our stop is a little ways away, and this trade actually worked. Okay, this is the trade that we looked at in the 15-minute chart before. This was an excellent trade. Now, you can see here, even though it's technically trending, it's a little early in the trend here, but we have this hammer candle, a strong move up. This is
Scott, got a good question in here I wanted to throw in. Sorry to interrupt. Yeah. Someone asked, what's the ideal point to exit? How many pips?
The ideal point is to not. Most people put their stop too tight at the start of the trade and too loose at the end. So what we're doing with this system is that we're continually banking profits all along the way, and we'll get into that. Later. But this is absolutely not a system where you set a target. Like, I'm going for 4R. You know, the majority of these trades make between 1.8 and 5R. That's the majority of these trades. So you can't, if you just exit on a limit, you're badly badly reducing your potential. And this is the secret of the high SQN here. So we need a more complicated exit algo for this. So it's absolutely not suitable to use targets. All right. So this one here, the price action is very supportive. We're in an early stage trend on the daily, and the 240, we're a little too far away from this moving average, but I'd give you remember we bend the rules a little at the start of the trend, and this is definitely 2 days into a move that we think is going to continue. The 60 is better, and the 15 is a thing of beauty. This is ideal. So we take this trade, and this trade worked. This was a big winner. Okay, so this one we used an 8-pip stop here. It made partial profits and then retrade. So this was this was a trade. So here we have a strong move off the lows, sideways. This is not ideal at all. I wouldn't take that trade again. The weekly trade, it looks like it could roll over. No, this is a terrible trade. This is one that I would not take, even though it worked. Yeah, this is just not cool at all. The 240 and the 60 are perfect. The 15, but the daily and the weekly, those are the most important things, and we just don't have that here. So can everyone see that this is an example of a poor trade?
Yeah. So what do you notice, like, from some of the losers? Do you have like a curse of the perfect setup? Like, what sort of pitfalls can you?
Okay, so we don't have the curse of the perfect setup like you do with Thor, but
Right.
what you do have is seeing into the future on the daily and thinking, oh, I think that'll go up today, but it's not certain. You really want something. You really want to be almost certain that today is going to be a bullish day. Like, you know what I mean? Like, you don't want.
Yeah, that makes sense.
For example, here, I'd be almost certain that it's going to be a bearish day next. I'd be almost certain it's going to be a bearish day next.
So you limit your options to really the most high probability, higher time frame, right?
Exactly. So what we're doing is you at the start of the day you do a scan. You might find 8 markets which are technically fitting the rules, and then you're gonna find the best cherries.
So how many do you think you follow each day when you really like cut it down?
Okay, so this is very person dependent. My performance is very good following 3 markets. It's great following 2, and at 4 I start to degrade, and at 5 I turn into a moron. So 4 is my hard maximum. I take a hard pass on anything more than 4, and as I'm approaching 4, as I'm approaching 4, it's not. I use mechanical entries. All right, so moving on. I'm just going to go to the bathroom for a minute, and while I'm there, can you guys put into the chat if you can see what you think is wrong with this trade? This is a poor trade that didn't work, that I took while I was learning. So yeah, I'll be back in a minute.
All right. So what do you guys think? A little 30-second break. You back?
I'm back. All right. So what do you guys think is wrong with this trade?
Nobody mentioned anything about the trade, but Matt asked, is there a better time of day to trade this or not? What do you think? Like,
I trade this in the Asian session. It's one of the only intraday FX systems I've seen that suits the Asian system, but the results are much better in the Euro and the NYSE session. So it's perfectly acceptable in the Asian system. I mean, as you can see, I took 14 out of 14 winners in the last week, trading it all at the start of the Asian session. The way you do it is whatever is the start of your day, wherever you are, you wake up and you check it once a day, and we can't control what session we're in. You know, if you live in Australia, if you live on the bottom of the world, that's just the thing. So if you're
I think CJ, by the way, got it. CJ said, you know, the time frames are all over the place, up, down, sideways, and that's kind of what it looks like to me, right? Like some of these.
So this is so if we look at, yeah, this is a poor trade because the trend is down on the daily, even though it sort of looks like it could be starting to break that trend. And you know the trend is still down on the weekly. It looks like it might bounce up to make a transition to a trading range with a top here, but that's just speculative. That's really me seeing what I want to see rather than
A lot of two-sided price action.
It's me seeing what I believe rather than believing what I see. And what I was tricked by was these top three time frames are almost perfect. So we've got this in the right spot. This is almost touching there. This is a very nice support line. You know, the stop is just below, and we've got it's very good on these time frames, but terrible on these time frames.
Hey man, quick question. Somebody asked, could you repeat where price should ideally be on the 240 minute?
On the 240, it should ideally be close to or almost touching the 8 EMA. So like this one, you can see, you know, something with a lower wick just touching it is perfect. That's absolutely perfect.
And are you going to have a write-up of this?
Yeah. It's all there for you. Okay. Okay, this one. We have the daily trend is up, and even if this is making a trading range, it's likely to vacuum to the top of the trading range here. So that's okay. The weekly looks good. It's working off sideways. It's working off overbought Momo sideways. The 240, that pierce below is a little worrying, but it's closed up above, so that's okay. The 60 is a little deep as well, but still looks good with that hammer candle. And the 15, we've got a long way to go to get stops. The stops aren't going to be anywhere until here, maybe here. So the volatility is a little high on this one. So this one is, you can see the candles are bigger, so we're not entering on the low volatility part of the range. But what I like about this is that we have a clear V bottom. So a V bottom is the real sign that these idiot shorts got short and then they're just getting fucked. So on balance, this is a trade that I would take, even though this is not the tight sideways pattern that we would ideally like. But we do have potential stop points here, here, and here. This one worked. All right, guys. So let me ask you a question. So how would your life change if you're trading like this instead of how you trade now? And, you know, it's not really about the money. It's more about how would it feel to get up and know what you had to do every day was not to just try and find some money, but sit down at the screen, do a very specific thing, do another very specific thing, do another very specific thing. So you knew exactly what you had to do today, and you knew when you could stop and when you could switch the monitor off. And you know, my point is that how would this change your life? And it's not just about the money.
Yeah, and that's the thing, right? Drawdowns are a real part of trading.
Boy, well, the drawdowns are very constrained here. So how would it feel to trade a system which is profitable 9 out of every 10 weeks? You know, how would it feel to be able to pay your bills every week out of your trading profits? You know, how would it feel to finally start compounding your account into something life-changing? And this was the system that really did it for me. I had one successful year before this system, trading Crazy Ivan, but I traded it with a risk that which in retrospect looks stupid. You know, I was trading very high R values and I made a good return, but you know, I traded this at 0.5% R values and crushed it for a year with almost no drawdowns. And you know what it felt like was, for the first time, I was like actually pulling money out of my account, out of my trading account every week to pay my bills. It wasn't like it was really a situation where it was my skills paid the bills, and it felt great. You know, for the first time, I felt like a professional because I was acting like a professional. I was trading a professional system, and I was paying my bills out of money that I'd found out of the market myself. So let me ask you one more question. Do you need help making this system a reality? And would you like to work with me directly and Daniel directly, and we can implement this stuff that we talk about today, and put together the exits, and put together the practice methodology, and put together the paper trading to small money trading?
Hey, Scott, we got a good question. Somebody asked, why'd you stop training the system when it worked so well? And I think it was time more than anything, right?
I got burnt out.
It was how long did you trade it for? About, I think I remember it was about 8 to 10 months. And I think you did about 75 to 80 R in that time period.
No, I did about 14 months, and
14 months, okay.
And I did 87% for a calendar year, but I was trading 0.5% R values for most of that. So
it's appropriate for a system like this, half, no more than one. That's what I would do.
So I got obsessed. I was compounding my account up to something decent for the first time, and I just burnt out. And eventually I wanted to build a daily chart system. And you remember I got in touch with you. I was like, I'm doing this really well, but I want to build a daily chart system. And we built Thor together, and Thor is a much easier lifestyle. Thor, you're done in 15 minutes in the morning. There's very little discretion. There's very little thinking. There's very little psychology that needs to be done.
And you love that, because then you can go to Bali, you can go to Australia, you can just come through to Italy, you can just hang out, and you live on the cheap. So it's cool. You don't have to, right? But I think for people looking to compound an account and trade a little more aggressively,
Thor is completely unsuitable for someone looking to compound a small account, because trend following systems by definition are spending a long time in drawdown. So you can never really count that you're going to be able to pay your bills this month while you're trading Thor. All you know is at the end of the year it'll probably be up.
Right. And I tried to trade Thor on a 60-minute, and Thor doesn't really work on smaller time frames. This system is better on smaller time frames. It's more specific. Whereas Thor gets you in a lot of bad trades, a lot of false trends on like a 60-minute.
Yeah, and doing this again for the last couple of weeks, it's really ignited a passion for it. I'm seriously considering going back to it. I love it. I think it's great. It's an awesome system. So who would like to work with me directly and Daniel directly? We can implement this stuff. So just knowing the entry rules isn't really everything you need, as well as the exit rules, which you're going to have. You need a step-by-step plan for practicing and implementing the system. So we can't just say, okay, now I know the rules and just fund an account and start trading it tomorrow. So we need you need a mentoring process, so you can send your first of all your paper trades to someone and say, is this good or bad? And then when your judgment is getting better, to trade for small money and have someone to talk to about the psychology and how that's affecting you. And then you need monitoring and record keeping process. So there's a lot to. The problem with discretionary systems compared to mechanical systems, I can show you the Thor rules. A week later, you can be trading that for real money. There's no real psychology, isn't going to mess with you. It's just mechanics. You're an execution monkey. With this, you can't do back testing, so you don't need to spend a couple of months back testing like some people have done for Thor, but you don't need to spend any back testing because you can't back test, but you need to practice a lot more. So it's going to take a minimum of. I started trading this for real money after 6 weeks, and Gabriel told me it was the fastest he'd ever seen anyone do it ever. And typically it's 3 months before you're ready to trade for real money, and that's about right. So it's about 3 months worth of work to do that. Now, I know it's a bit awkward, but I have something to sell today. So if you got any of you guys who are watching, you've already bought the System Building Masterclass. This is all part of the System Building Masterclass. So I'm not trying to sting you for extra money or anything like that. So if you guys want me to, I can show you now. Daniel, you guys want me to keep going or do the rest of it?
Yeah, I think everybody wants to see what you have in store. And one of the things that we want to start doing is we want to start holding those small calls we talked about and really getting into the groove, of day by day, week by week, getting these systems going. So, yeah, let's talk about that. And you're going to include all these rules, everything within there. So everybody who's bought, we're not charging you more. You're going to get everything. within the class. It's going to be updated. I got a couple spreadsheets I've been working on. I'm going to take the Google Sheet and convert it into an Excel, 3 versions, one for stocks and futures. I'm a little behind on that project, but we want to get that going. What else were we going to throw in there? Were you going to do a deep dive on this?
Oh yeah. It's a very deep dive. So this is let me continue. So as part of the system building masterclass, you get the rest of the system. So you get the exit rules for the discretionary system, you get the exit rules for the 240-minute mechanical, and you get the every time frame mechanical. So there's 3 systems you get all the rules for. You get a full deep dive on the mechanical entries. You get the Protect R exit methodology, which is this plug-in exit methodology that works really well for marginal edges, and you can use it in a lot of systems, but it works great for the mechanical systems. You get example videos of me live trading the system, and you get screenshots of trades that I've taken in the past. You get spreadsheets. You get everything that you're going to need to turn this from today into maybe 3 months' time. You'll be trading this for real money and doing very well, I hope. So it's part of the system building masterclass. So I didn't want to just sell this product as like an extra thing and charge everyone extra. Our flagship product is the system building masterclass. It's a wonderful product. If anyone's in the chat who's actually bought it, feel free to tell what you really think of it. There's lots of people who bought it. Everyone's happy with it. You're going to learn every single aspect of building trading systems with an expert, 2 experts actually holding your hand every step of the way. And we're going to work through the process of building a high-performance system that suits you perfectly. And we're going to break that down into bite-sized chunks that anyone can do. So you're going to be picking one of the systems in the system building masterclass or developing a new system. You can take one of mine and modify it. You can take this one. You can take any system, or you can start from scratch and build something completely different. And we're just there to help you. And we've got a really good step-by-step process for doing that. So this contains every single thing that I know about building trading systems, and it's my entire life's work, and it's distilled into bite-sized chunks. It's a step-by-step process for conceiving, designing, optimizing, testing, implementing a high expectancy trading system. It's much better than anything else on the market. It's over 10 hours of videos. It's spreadsheets. It's PDF workbooks. It's done for you systems to use as examples or inspirations or just to trade. We've got my favorite part of the system building masterclass is that we do the most common popular types of systems are trend following, mean reversion for stocks, volatility breakout, momentum, and pattern-based systems. This is a pattern-based system. So we do really deep dive videos on the most popular system types. And that's enormously helpful because when I started to build systems, all the systems I knew were what the systems that other people had taught me. So I couldn't really conceive of different types of systems. I just needed some creativity. So as well as that, we have complete done-for-you systems that you can adapt for your own purposes, or you can trade as is. So we've got the Crazy Ivan pattern-based FX system. It's in conjunction with this methodology that we've talked about today. It's an amazing system. Overall, it's an average, edge applied all the time. But in this situation, it's a wonderful edge. So we've got this modified Crazy Ivan for intraday FX. We've got stock mean reversion. We've got portfolio rebalancing system. We've got a basic momentum system, which is very good, which we put into Quantopian if you want to automate it. We've got a slot in bear market system, which is great because I borrowed this from a good friend.
That's cool. I like that system. I don't like the Crazy Ivan system. I like the Crazy Ivan system in like high volatility, directional markets. But the Crazy Ivan system's not one of my favorite. I feel like that system is churn and low expectancy. But that slot and bear market system, like the perma bear inside of me, I love that one.
Well, and it also comes straight from a hedge fund, so it comes from a really
it's a real system. It's a real professional system.
Yeah, just stolen. Okay, so we've got this mean reversion cookbook. So there's only a limited number of ways to do stock-based mean reversion. So the way it works is you just pick an entry you like, you pick an exit you like, you pick a universe, and then you backtest. So mean reversion stock systems are the low-hanging fruit for people who don't want to learn about chart reading, blah, blah, blah. And then we've got this fail breakout intraday FX system, which we've been talking about today. So here's what you're going to get. You're going to get the system building masterclass, which is easily worth $2,000. You're going to get the failed breakout system, which is $3,000. That's what I paid for it. You're going to get these mechanical systems, which I developed to plug into it, which are worth $3,000. Now, if all this did was finally let you get some financial reward for the thousands of hours I know you've already spent learning this stuff, would that be worth it? So if all this did was cut your trading day down to 20 minutes a day like mine is, would that be worth it? So if all this did was let you stop using other people's setups and systems and, you know, stop just Googling for people like me and settle down with one system, stick with it for years and just get comfortable with that system like an old comfy pair of jeans, you know, would that be worth it?
Or a couple systems. I think that's what you and I found success with, is trading 2-3 systems, right? Where they complement each other, where you have a mean reversion, a trend. Right now, like we're trading kind of portfolio based with a little intraday and some of the daily. So I feel like they balance each other out, you know?
Yeah, I agree 100%. So if all this did was let you make the jump from being a hobby trader to being a pro trader, to being so when people ask you, what do you do? It's like, oh, I make my living from trading FX. I make my living from trading stocks. Would that be worth it? So if it only stopped you from the disaster, which always happens when you try and learn to trade doing the hardest type of trading there is, which is trading without a system, you know, would that be worth it? And if all this did was allow you to compound your little small hobby account into something meaningful, something life-changing, something where you can be shopping for real estate and, you know, and planning for a future instead of hoping that you don't blow up this year, would that be worth it? So what you're going to get is you're going to get the lifetime access to the system building masterclass. You're going to get the failed breakout FX system. You're going to get the failed breakout intraday FX mechanical system, $3,000 value. You're going to get some spreadsheets from Daniel, which do all the heavy lifting for you. So this drastically reduces the scope for mistakes, and it instantly makes you a much better trader. So when Daniel and I switched from our primary version of the spreadsheet to our current version, mistake rate dropped by like 76% just from having a better spreadsheet.
It created less work. That was the big thing. We were doing a lot of repetitive work each day, and by automating a lot of that and just focusing on the charts and the system, it made it easier, especially as you go through drawdowns, right? And you don't want to do the work, and it takes like a few hours to enter these setups. Whereas when it's quick and easy, you know, okay, you're in drawdown, you just push right through.
Yeah. So you get the $2,000 value system building masterclass. You get the failed breakout systems, both of them $6,000 value. You get the $499 value. You get the Crazy Ivan complete system with results, spreadsheets, instructional videos, $13,000 value. I actually paid that much. It's not worth it. But so did Rita, so did you. We all paid $13,000 to learn that system. So if all it did was kick your ass into gear and finally make you practice a system until you can trade
I got lucky. I paid less than that, but I spent a lot of time on that shit.
Spent a lot of time. Okay, and if you could finally go from learning to I earn my living from the markets, would that be worth it? So I'm not going to read out all that stuff again. So if all this did was save you from months or years of dead ends and blind alleys, would that be worth it? So you're going to get the system building masterclass $2,000. You get the spreadsheets from Daniel $499. You get the $13,000 Crazy Ivan. You get the plugin Protect R exit methodology to optimize marginal and pattern based edges. And you can automate this, and I have automated it. $1,000 value. You get the slot in bear market system, which is the current short selling production system from the all-time. It is literally the all-time champion hedge fund in Japan. It's the highest returning over the last 30 years. It's what they use. So if all this did was allow you to stop trading your stock picking systems and slot in a bear market system when the market phase changes you to let you make money while others are bleeding, would that be worth it?
That's like a daily system, right? The slot and bear.
It takes very few trades. It takes like a trade a month, but you check it once a day.
So it's like a good hedge to a longer term, maybe retirement portfolio when you're doing like a buy and hold as a trade the other side. You're
not trying to make money in a bear market. You're just trying to make a little bit and just not get your ass handed to you. It's a very conservative. It's a hedge fund approach to it. It's a conservative approach. You're not trying to go balls deep on puts in a bear market. The counter trend rallies are just so savage there. It's a way to make. You know, in 2008, if you made
that's 20, what I did in 2008. I spent all my 2008 having puts, naked puts, all across the market. And it was fantastic on the days the market went down and big volatility, but those counter trend rallies, oh my God, you get 30% drawdowns in one day. It's a painful way to trade in the bear market. But you also can, make a little return. But again, it's your volatility is crazy. You're going to blow out. It goes a little too against you, and you're at zero.
All right, so it's going to cost you thousands to learn this privately from me if I'm even available, which I'm not because I'm too busy these days. So to learn this by trial and error like I did really sucks. Could wipe out your trading account. I blew up early trading accounts again and again and again. And your learning experience in this is going to run into tens of thousands of dollars minimum. And the opportunity cost of investing in crappy courses that get you just past beginner level, like from my point of view, everything that I've ever seen about this stuff, about system building on the internet, is really beginner level stuff. So what I'm talking about is this is a product that's, if you're a beginner, this is not suitable for you. This is an expert level product. This assumes you know the basics. I've got no time in my life for teaching you, what's a bear flag, what's a bull flag, all that crap. There's books, you can buy a book for $20 with all that in and just go and learn it yourself. Go to babypips.com. It's got it all in there. This is for experts. And what I don't want you is wasting years going down blind alleys and dead ends. So there's so many blind alleys. There's so many dead ends. So here's what you're going to get. So you're going to get the system building masterclass, $2,000 value. The intraday FX systems, $6,000 value. You're going to get Daniel's spreadsheets, $499. You're going to get the Crazy Ivan complete system. You're going to get the Protect R exit methodology. You're going to get the slot in bear market system. Total value $25,499. But I could charge that money for this. Van Tharp charges $60,000 for his course. And it's only for discretionary systems. It doesn't even contain any system rules at all. You've still got years of work to do. I'm not going to charge you that. I'm not going to charge you $19.99. I'm not even going to charge you $1,099 or $9.99 as my gift to you. The total value, and you can buy it at this URL, scottphillipstrading.com/system-building. $5.99 for everything. Now, I know that's gone up from the launch price because you remember those guys who bought it at the launch, I told you were getting it at a discount. We put the price up $100. It's going every time I do one of these.
Oh, you raised it already? Or you want to keep it $4.99 at least for, I thought we were going to do 2 more hours of $4.99. Come on, do the 2 hours for the people who attended the webinar.
Motherfucker. All right, okay.
Come on, do it the 2 hours. I just put it in the chat too. You're gonna make me look bad. Do the $4.99. Do the $4.99. We'll raise the $5.99. It's fine.
Motherfucker of a business partner, Daniel. He's cost us money. So for 2 hours, I'm gonna be dead set on that. In 2 hours from now, that shit goes up, right? So if you get it in the next 2 hours, you can have it for $4.99. Other than that, it's $5.99, and every webinar we do after this, the price is going up. We put more stuff in. There's more than $100 worth of value in every time that we're adding. Every time we put more stuff in, the price is going up. It's way too cheap. You can get it at scottphillipstrading.com/system-building. Now, got something excellent for you. So can I help you kickstart your journey? And I've had a really good time this last couple of months helping serious people achieve their trading dreams. There's some, I've really enjoyed working with particularly Max in Australia and Harry and a couple of the other guys, Paolo. Everyone's really serious guys. They're serious students of the markets here, and I've really enjoyed it. Now, if you join, I'll give you 2 months free, and which is worth $99 of unlimited assistance from me. Now, the people who've gone through it know that I'm happy to spend as much time as you want. You can get something on my calendar anytime and Skype me. And there's some people that we Skype every day just for a few minutes and just check up on. Some people I review their logs. Some people I help them with back testing and scatter plot testing and all kinds of things. And so you get unlimited assistance from Daniel and I. And unlimited means what it says. It means unlimited. So as hard as you want to work, I'll match you hour for hour. So Daniel is a world-class expert in trading spreadsheets, and he knows as much about trading systems as I do. And in execution, he consistently outperforms me, which is very frustrating when we trade discretionary systems head-to-head. which is very.
You build them better. I can't build a system. All my systems suck that I try to build, except for the one RTV system I built, which is like my crowning achievement. But otherwise, system building is you taught me everything I know about system building.
I'm good at system building.
You're good at system building, yeah.
So
but what, yeah.
If you want this help from me, you can have 2 months free. So after the order form's complete, you'll be offered it. So just click yes. You can cancel at any time in the first 2 months. You don't have to pay anything. So there's only another 100 people for this intake. We got 100 last intake and we shut it off. So, this is not some sort of false scarcity bullshit. Last time we took 100 people, we shut it off because we give a lot of personalized service here. There's a lot of help. There's a lot of stuff that needs to go into. So when it reopens, the price will go up like the price is going up now. The price should already be up if it wasn't for that arsehole Daniel. And some of these bonuses might not be there. So you can.
I told 50 people earlier today that it's going to be through the end of the webinar. It's all right.
All right. I'd like. It's worked out. So I'd like you to imagine how life will change a year from now after you're building your own trading system or trading this system. So you'll have a full year of totally professional trading under your belt. If you're trading this intraday FX system, you'll know the system back to front, inside and out. You'll never have to look at any documents to remember what the rules are. You'll know this. This will be like putting on. This will be just so comfortable for you to trade. There'll be no doubts. There'll be no fears. There'll be no problems. So you won't care about what the market does tomorrow. Your total focus is going to be on taking these correct entries and taking the best entries that you will. You're going to be calmer. You're going to be happier. You're going to be doing a fraction of the work. And you're going to be doing a fraction of the work while making way more money. And finally, you're going to see that this trading life is sustainable and it's for you. So what I'm telling you now is you should buy this. I really think this is a fantastic course. I really wish it was available for me when I was learning. Daniel, would you have bought this course?
Yeah, I definitely would have looked a lot into it. I'm always patient when I buy things. I never rush into it. But I think after a couple of these webinars, I probably would. Because one of the problems I found was I didn't know what kind of how people built systems, and building a system was always difficult for me. Like, is this a complete system? What am I missing? So I think seeing the variety of systems and kind of, you might not trade a cookie cutter, but you might edit it. You might customize it a little bit to your own specs, right? And that's what everybody, you can trade it as is, but you kind of want to make it your own. So then it's even if you only just reorder, even if you just change the way that the chart's laid out on the screen, it would be enough for your subconscious to tweak and go, that's mine. It's not his anymore. Like in my mind, this doesn't feel like someone else's system because I've modified it enough that it feels like mine. Right.
Now, you should buy this. Thank you very much for your time today. I think that's it.
Yeah, that's it. Any questions? You want to jump off? You want to stop sharing screen?
All right. So any questions? Whoa.
You know how to turn off the screen share? Click the green button and turn it off.
Green button.
On the left. There you go. There you are.
All right. Okay. Any questions, guys?
Yeah, let's hang around for a little bit. Suggestions for FX brokers. Where are you based out of? Interactive is good if you have a serious amount of capital, right, Scott?
I have a strong preference for interactive brokers just because they don't lie, they don't cheat, they don't steal, they don't play games. They're financially conservative. When the Swiss bank removed their peg, some of the other FX brokers went broke, and Interactive, their stock price stayed the same. They were just way.
Remember, our stock filled, and a lot of people we know that were using shitty brokers.
So we were trading.
Blown out, dude. They got blown out, and our stock was filled. I mean, we lost 1.7 R that day, but it could have been a lot worse.
Could have blown up our whole account because we were naive. All right. So other questions.
Other questions. FX broker for Canada. I think Interactive's in Canada, right?
I think so. I would do then. I mean, I've never used any of the.
And I've used MB Trading. They're okay with a small amount of capital. I think if you have over $10,000 and you can trade with Interactive, and we don't get paid by Interactive. So we do get paid if we sell the course, but we don't get paid by Interactive. So I just think we've had great success with them, right? It's a good broker.
I'm a happy customer. I haven't found any need to look anywhere else but them.
Ninja Trader brokerage is good as well. For all the shit we give Ninja Trader, their brokerage is not bad.
Yeah, the brokerage is okay.
The brokerage is okay. Who else? Oanda. Don't use FXCM.
Yeah, don't use it.
Don't know if you use FXCM.
Thinkorswim has bad liquidity on FX.
Yeah, but it's good for options and stocks. Let's see some more questions.
Options and really good as a beginner broker for.
A couple more questions on the 5-minute chart. Don't you find spreads stop you out a lot?
No, not if you get a good broker. So typically you want to use. So this is an interesting thing. You want to have a minimum of about 8 pips of stop, and the optimal stop distance. We did a proper statistical analysis. The best performance in trades was when your stop distance was roughly 1.6 times the 60-minute ATR 14. So that usually works out to between 12 and 14 pips is about the sweet spot. And your spread in FX is going to be half a pip max, and don't forget, we're minimizing the effect of slippage with the system by we're entering on a limit. So because you're entering on a limit, you're only getting slippage on half of the transaction. So you're getting zero slippage on the way in. If you get a better slippage on the way out, no big deal. And also, you've got because we're trying to sell into a strong move, we're taking partial profits along the way. There's every chance you get positive slippage on the way out. If you sell out in a fast-moving market, if you hit market in a fast-moving market, you get positive slippage, not negative slippage. So overall, this is really a slippage-neutral system. It doesn't get when you add up the positive and the negative slippage, it's virtually nothing.
Yeah. Here's a really good question. There's two. One person said they're always conscious of certain price levels. Is there anything you consider when setting your entries? And then the other one was, what do you do to prevent burnout? You want to address kind of both? Like, what do you do to,
okay.
Yeah, go ahead.
So the original system, Gabriel would look at one of those lists of announcements coming up, like FX Street or one of those, and he would stand aside from virtually any upcoming announcement. Now, what I noticed is that the only announcements that ruined trades were the really big ones. Like, if you're trading the Aussie dollar, the RBA announcement, if the Fed days, the FOMC. So I would stand aside for the very big announcements. And as far as critical levels, Gabriel also liked to stand aside. He liked to move his stop below critical levels. So if I have a spike low very close to where I'm putting my stop, I will relax the stop down a couple of pips just so that it comes under that spike low, just because you get a little more protection for not a lot more risk. But that's it's something that we're going to go through on the deep dive in the system building masterclass. So it's pretty cool.
By the way, where do we put the this system? Is it under the 14 systems or is it under the masterclass?
No, it's under the masterclass, dude.
On the masterclass?
Yeah.
All right. Someone asked about that, so yeah, it should be under there. And we're gonna add a deep dive to that. We're gonna put in the PDF over the next couple days. So yeah, give us probably like 3 days, guys, and we'll add those things in there.
Off of that last question, bro.
Oh, the other question was, how do you prevent burnout on this system?
So I haven't traded this since early 2014, and I stopped because I burnt out. I used to have to take regular beach holidays, and what I find personally is that if you take a day off the markets and still check the markets, it's not a holiday, and your brain does not readjust. You have to. So the greatest luxury that we have in this world in 2018 is leaving home without the phone. If you can, do a little thought experiment. How does it feel to switch this fucking thing off? Leave it at home, go out for the day. And I control burnout by doing the stuff that the childish part of my psyche loves. So what I would do is I'd go sit in the park and read a book and eat an ice cream in the park, or I'd get a massage, or I'd go to a fine dining restaurant and eat a 3-course meal, all by myself reading a book, masturbating with myself. And, whatever is your favorite stuff, if it's walks on the beach, if it's massages, whatever is the stuff that the childish part of you really wants to do. If you want to swing in a swing, go swing in a swing, but you need to do it without connection to the market. So the key to controlling burnout is to switch everything off and do something that's completely, if you're walking around checking your phone, you're not relaxing. Okay, so I see this question coming up with the FX broker I use. I have 50 pairs. No, I don't narrow it down. I follow about 30. You don't have to follow them all. The ones that aren't good to follow are the ones where you have a bigger spread. So NZD JPY. Now, how much money can this handle before performance starts to deteriorate? If you're trading E-mini, Euro USD, if you're trading the majors, if you're trading the majors, you're never going to run out of liquidity. If you're trading NZD JPY or GBP NZD, you're going to run out of liquidity. It's not that you're going to run out of liquidity. You're going to look at 2 pips of slippage on the way out, which is going to be 1 pip of slippage round trip, which is going to take about 0.1 to 0.15 expectancy off the system. So if you're still trading at 0.5 expectancy and that dropped down to 0.35 after slippage, that wouldn't be the worst thing in the world. It wouldn't be a deal. I don't think it will get to the point that it's a deal breaker unless you're talking about, above $5 million. I wouldn't think this system would be suitable at all. I think above $5 million worth of capital, this is not. This is only going to be suitable for E-mini and Euro USD and USD JPY, etc.
What about minimum? Did you mention minimum?
Oh no, this is totally fine to trade with a $1,000 account. Now, Matt's just asked in my Skype window, did I ever trade Gabriel's other 2 systems? Yes, I did. He has another system called Flat Level Breakout, and he has another system called 3TMA, which are much more prolific. They take much more. They take many more trades. I've also traded the Flat Level Breakout system. Sorry, the 3TMA takes a lot more trades. The Flat Level Breakout doesn't take as many. I found about 1 in 5 trades that I was taking was the Flat Level Breakout system. So I just eventually discarded it. I thought, well, the expectancy was good. It was still making money. It was just an extra complication that I didn't need. For me, I'm always trying to simplify, and I put in the mechanical entries to take over that. So in the 14 systems, we'll be adding to Gabriel's other systems in there. They're cool systems. There's nothing wrong with them. They're great. And especially the 3TMA, it just prints setups all day. Like if you want to take 10 trades a day, 3TMA is your one. Okay, any more questions?
No, I don't know if people burned out. How you doing? I feel like we got like 15 minutes left.
Dude, we've been going a long time.
So yeah, I don't see any other questions. I don't know. You got any questions? What else can we kind of
let's wrap it up, bro?
Here a little bit. We like this for FX. I would love to do this on cryptos, but it's not suitable for cryptos. You got to do something else.
Yeah, completely unsuitable for cryptos. All right, guys, I'm going to wrap this up. Thank you very much for your time today. It's been my real pleasure to present this, and thank you, Daniel. I'm really looking forward to working with all of you.
Hey, here's a good last question. One, we're going to send out the slides, right? We're going to send out the.
Give me a day or 2 for that.
Yeah, give us like 1 or 2 days. We're gonna head out after this. And why would you trade? Last question we'll take. Why would you trade Forex versus futures? What are pros and cons of both? I would say Forex, you need less capital, is one of the big advantages.
Forex, you need less capital. The position sizing is exact on Forex, and position sizing is an estimation on futures. That's the big thing. Futures, you're a regulated market. So the government is stopping scams and bullshit, and you don't get any of that worrying if your broker's about to fuck you sort of stuff.
All right. So I think we're all good. Thanks everybody for joining, right? Any last words?
All right, guys. We're out.
All right. Later.
I don't know how to stop this broadcast. There we go.